I was searching Zero Hedge up and down to try to find this article. Like, maybe it wasn't there. Oh, check Economic Collapse blog. It's not there. Oh, Wolf Street. There it is. The guy that is keeping up with everything EU related, Spain, banks, all of it. Don Guejones, who writes for Wolf Street all the time. The next Italian bank threatens to topple. So I chose to do this video next because it goes right in line with what my previous video was. European Central Bank wants to ease off of the 100K limit protection, basically, for bail-ins, and give you 5 days where you can't really access all, you can access a little bit of money during a crisis. But I thought everything was fixed. All the big banks across the planet got a massive bailout. Why would they need to change the rules? Leave the rules in place. They're fine, aren't they? Why would you want to take that away? Are you expecting some big banks to collapse again? Come on. Come off of it. Let us know, ECB. Anyways, the next Italian bank threatens to topple. Sharp dose of deja vu for Italy's teetering banks. Now, you were made aware of this way in advance by Cliff High's Webbot reports. Remember Italy being in there numerous times? In a speech that did little to calm investors' nerves, Italy's finance minister said yesterday being, believe it or not, the 15th of November, that he was strangely optimistic. Does the word strangely, if I were to come out and say, hey guys, how's it going? Yeah, you're really concerned about this thing over here. Joe, we're really concerned about that massive bonfire you created. It's going to catch the whole damn place on fire. And I said, guys, that fire is getting close to being right next to the freaking house and my crypto cave. It's that wide. I'm strangely optimistic that we'll be fine. Right? Would you not sit back and say, why did he use that word? Strangely optimistic. In other words, it's extremely strange for me to use the word optimistic. But that's what he said. He was strangely optimistic about Italy's economic outlook. Senior Eurocrats in Brussels are far from convinced. Italy's accounts are not improving, blasted European Commission Vice President Mr. Ketanin, at a press conference yesterday. The financial situation in Italy, according to Ketanin, is due to get worse, with Italy's deficit in 2018 now predicted to be 3.5 billion euros more than previously stated by Paolo Gentiloni's administration back in the spring. It's you see the commercial on TV, the chefs, expert chefs being put out of business by, crap food, frozen food. Bertolli. Bertolli, not another one. Our customers are going. That's him. Not Genitoli. Yeah, him. He said it was going to be this level, and it's 3.5 billion more. Sorry. The only thing that I can say in my name is that all Italians should know what the real economic situation in Italy is, he said. Gentiloni's. The real economic situation includes the fragile health of the nation's banking system, which continues to teeter on the edge, despite the controversial rescue last summer of Monte dei Paschi and the resolution of the Popular di Vicenza and Veneto Banca, which left over 40,000 businesses in Italy's wealthy Veneto region starved of credit. It's pretty clear that investor concerns about the health of Italy's toxic debt-laden banking system have not been put to rest. Today's developments will hardly have helped steady nerves after mid-sized lender Carige, or is that Carige? Oh, Fragile. Must be Italian. No, honey, I think that says fragile. Oh, yeah. With assets of 26 billion, scuttled a capital increase demanded by European authorities when it failed to get the backing of a banking consortium led by Credit Suisse, Deutsche Bank, and Barclays to underwrite the deal. In a statement, Carnegie said it had called a board meeting on Thursday to discuss the next steps. That's it. We've got a board meeting scheduled, everybody. We're going to figure this out. What are you guys going to talk about? Whatever the next steps are. What does that mean? What does it mean to play us out? What does that mean? To end the show, to end the okay, all right, go. I'm Bill O'Reilly, and that's it for today. I will never stop doing that. That is so epic. When I saw that first time ever, Bill O'Reilly meltdown on what was it? Not 60 Minutes. Not Dateline. The hell was it? Let me think of it. I just have to think. That's bothering me. Hold on. Got it. This helped me right here. Core. Look, turn around. This just helped me. Inside Edition. Thanks, Core. Where was I? Yeah. They called a board meeting to discuss the next steps. The shares of Genoa-based Carnegie, which had already lost roughly half its value over the past year, were suspended on Milan Stock Exchange. They closed on Wednesday at a massive, huge, just kidding, price of 17 pence. Could be pence, since we're talking about the other side, not cents. Pence. Let's go with pence. 17 pence. The board, or shillings. I like shills, and I like the term shillings. 17 shillings. Basically 17 cents. The board had a fixed price of 10 cents, or 0.10 euro, if you will, per share for a capital hike of 560 million euros demanded by regulators. The proposed cash call is over 4 times the bank's current market value. Hey, I'll sign up. You're asking for basically, you need capital now. Been in business all these years. Obviously, you're failing miserably. You're asking for 4 times what the damn bank is worth, and you need to borrow that? Don't normally, when someone's asking a price of a company, you look out 5 years. Hey, what do you do every yearly? What's the profit? Okay, we'll multiply it by 5 years, and that's what we're going to offer you. Isn't normally that how, kind of sort of how that goes? No, we're not selling it. We just need to borrow the freaking money. We need to borrow what we think it's worth currently. And going down the tubes fast. Epic. The proposed cash call is over 4 times the bank's current market value. What's more, Carnegie has already gone through a capital expansion. And maybe it's Carnegie. Of his French, Carnegie. But it's Italian. So is it Carnegie or Carnegie? You make the call. Anyways, they've already gone through a capital expansion worth 800 million euros in 2014 and another one worth 850 million just a year later. So hold on, 800 million then, another 850 million in 2014, 2015, and now we need 4 times what this turd is worth because we are in big, big trouble. But they got 800 in 2014, 850. Oh, yeah, this bank will be solvent. This bank is solvent. I feel totally... You know what? I'm going to sell all my cryptos today. It's going down. I'm going to sell them all, scrape up that money, and dump it into this thing. That's what I want to do. That's going to be... I bet that's the kind of advice the guy at my bank's going to tell. If I go in and talk to this guy. Financial investment. Get out of my face. I'm so tempted to go talk to this guy. Even if I don't record it. Just to tell you, guys, I had to go talk to this guy. I had to pay him a visit. I had to see what this guy said. It would make an epic YouTube video. And maybe for that reason, I may go do this. I'm dead serious. I might go do this. Anyways, just as happened with MPS last year, investors appear to have finally caught on to the fact that pouring money into a bank saddled with huge amounts of suspect assets and non-performing loans in a country gripped by a systemic banking crisis is unlikely to pay off. Now, just months after Italy's government bent EU bank resolution rules out of all recognition to bail out MPS, it seems that another resolution could be in the offing. Given current market conditions, we do not rule out Banca Carnegie will be put under resolution, Milan broker Arco said. There are, it seems, other options such as the postponement of its expansion, the sale of the group, or the segregation of a bad bank with the support of the Italian government. In other words, taxpayers will own it, or part of it. The prospect of another bank resolution triggered a panic sell-off of other mid-sized banking shares. Rival Creval, which had just announced plans to raise 700 million euros, or 4.4 times its market value, another bank, via a share issue, closed down 19%. Oh, while you're closing down 19, my Bitcoin and Ethereum, they're up past that last few days. Sorry about your luck. MPS saw its shares extend a 7-day losing streak after tumbling 4.1% today. Again, this is several days ago. In the last 5 days alone, the stock is down over 20 stinking percent. If there is another bank resolution or taxpayer-funded bailout, there's a huge risk that what little confidence remains in Italy's banking system could crumble, especially given the sheer scale of the rot. As we reported back in March, he links to it, this year, almost all of Italy's largest banking groups, with the exception of Unicredit, Intesa Sanpaolo, and the investment bank Mediobanca, have Texas ratios, and again, I covered that earlier this year, what those Texas ratios are, in excess of 100%, meaning that the total value of their non-performing loans is greater than their tangible book values plus reserves. They got a whole lot of crizzap on their balance sheets. Hint, pretty much all banks do. Don't let the word get out. Banks tend to fail when the ratio passes 100%. In Italy, there are 114 of them. Of them, 24 have ratios of over 200%. Some banks fixing to bite the dust, and another one. I'm gonna go ahead and stop now. There's just a tiny bit left, but I'm gonna end this note. I'm just gonna beat. I'm only doing the beat. I'm only gonna do the. Matter of fact, no, I'm not. Take that back. I'm about to do a live stream. I'm about to do a live stream. This is the second video for Monday. I wasn't doing any more. I was gonna do a live stream after these two. Sunday night. Therefore, I'm saving this beatbox for the live streamers to see if they can figure out what song this is. I'm not going to do any rhythm, just the beat, the drum line only. I want to see who knows it. Okay, I want to see who knows it. But this will be ancient news by the time you see this video. It'll be the third one. The first video will be actually the live stream from Sunday. Anywho,